And so now, the fifth and final principle that I want us to look at is the appropriation account. So to appropriate is basically to split, to share. So the appropriation account is responsible for the distribution of profits amongst three relevant stakeholders, right? So these three relevant stakeholders is that firstly, money that we generate, and now we know from our profits, we firstly need to pay taxes over to SARS, right? And then after we've paid taxes to SARS from our dividends, you from our profits, we now need to pay dividends. So dividends is a second payment that must be made. And then lastly is that a company, after it has paid taxes, has paid dividends, they then retain the profits. They keep money for themselves in order to keep on operating. So here we're saying that this thingy appropriation account is basically the last section of the income statement. So if we remember the last section of the income statement, we would have our profits before tax there. So we would have our profit before tax, right? And then the amount would be there. So the first thing we would then pay there would be our income tax expense. Income tax expense, right? And then we would deduct the money for SARS then, right? And then the following thing would be our profit after tax, right? So it's going to be our profit. Okay, let's use a smaller thing to shade them. So here would be our profit now after tax because of we've taken our tax. So now this is a section that we don't really see in our income statement and won't really be or is not really part of income statement, but this is what really happens. Okay, I'll be with you now. So now after we've paid our taxes, we know that this profit after tax belongs to the company. But what then happens is that there's dividends that we need to pay. And if you remember, we would pay the interim dividends and then we would declare the final dividends after we have seen what our profits are. And then after those profits, we've seen them, we would then pay those dividends. And then after paying those dividends, a company would then retain some money for themselves. So this will be retained income. So in the appropriation account, we see three things. The first thing that we are going to see is our profit and loss. The second thing is money being paid to SARS. The third thing is going to be dividends being paid to shareholders. And then the fourth thing is going to be money being kept for ourselves. So a retained, an appropriation account would look something like this. So we'd have our appropriation there. Appropriation account. Then we would have our credit side, we would have our debit side. So here, firstly, the first thing on our credit side, if we've made a profit, we would have a profit or loss, yeah? Which would be the money there. And then again, with this side, we would have to look at the money or the funds that we need to distribute to the relevant stakeholders. So the first one would be SARS. So we'll take income tax to SARS. After taking income tax to SARS, we would then take dividends to shareholders. Dividends to shareholders, right? And then after we've paid income tax, so this is our profit. From this profit, we would pay our income tax. After paying income tax, we would pay dividends. And then after we've paid everything, we would then close off this thing or balance it by retained earnings. And then that would be our thing there. So this would always be balanced by that retained earnings there. So this is a very important account to remember. They might ask you to complete it in one of your tests or exams. We don't know. And again, this is basically just the last section of our income statement and deals with how we distribute profits amongst the important stakeholders in the building. So we take our profit, we send a portion of it to SARS. After that, we send a portion of those profits to the shareholders. And then after we've paid everyone, we keep some money for ourselves. So hence we have this here. This retained earnings is us keeping money for ourselves. Okay, let's just rather make it green. So this here is us keeping money for ourselves. And then a few more important things to remember in terms of the final accounts. So now we know that. So our final accounts, the first one we normally have is our trading account, right? We know that we have a trading account. So this trading account is trying to calculate our gross profit, right? So in this trading account, we close off, this will close off our sales and your cost of sales. So here will be your sales and your cost of sales, right? That is what our trading account is for. And then after our trading account, we have a profit or loss account. Sorry, let me make it green as well. So after the trading account, we would have our profit or loss account, profit or loss account. And then here we know that we are recording every income and expenses, apart from that sales and cost of sales that we recorded there. And then the final one would be our appropriation account. And then we know in our appropriation account, we are bringing that profit or loss that we have determined here to there. And then after we've determined that profit or loss, we would then have to allocate it to our income tax, dividends, and our retained earnings. So the last one is our appropriation account, which then deals with the distribution of e-profits. We did say distribute profits. So these profits are distributed to 1, your SARS, 2, shareholders, and 3, the company itself. So I hope that makes sense. Profit, we generate profit, we distribute to SARS in a form of income tax, we distribute to shareholders in a form of dividends, and then we distribute to ourselves as the company by keeping the money for ourselves in order for us to be able to operate in the future. So that is that for this section. Thank you.